Hey, this is John Lee Dumas of EO Fire, and you're listening to the Old Dogs REI Network with your host and top dog, Bill Manacero. You must be prepared to ignite.
This episode of the Old Dogs REI Network is brought to you by Mino Studio. Mino Studio is a pre- and post-production facility for all of your audio needs. Mino Studio's founder is an accredited audio engineer with top 40 and indie album credits. With over 30 years of music industry experience, Mino Studio can take your podcast from idea to reality. Contact Mino Studio at minostudio777@gmail.com for more information. That's Mino Studio spelled M-E-N-O, minostudio777@gmail.com.
In a world where jobs are how most people make money, one man, one desire, one challenge dares to break the mold. Welcome to the Old Dogs REI Network, where we don't work for money. Money works for us. Coming soon. Viewer discretion advised.
Welcome to the Old Dogs REI Network, where cash flow is king. Real estate investing, the means, so you can enjoy your retirement dreams. This is the show where we cut right to the chase. No sales pitch, no long monologues, just simple how-to real estate investing advice, so you can earn the passive income you need to enjoy your retirement today. And now, your host and chief old dog, Bill Manacero.
Welcome to the Old Dogs REI Network. I'm your host, Bill Manacero, and this is the show where 50-plussers and anyone else who wants to listen get solid, no sales pitch real estate investing advice to help generate real cash flow. This podcast airs twice weekly on Mondays and Fridays, and if you aren't already a subscriber, go to iTunes, type in Old Dog, spelled D-A-W-G, find our podcast, and subscribe. Well, we're real excited about today. We've got just a wonderful guy here, Bob Bowman. He is the key principal for Bowman Investment Group, LLC. He's a real estate investor that acquires institutional-grade apartments and office buildings. His properties are syndicated and are typically value-add deals that produce good cash flow and build equity over a 5-year hold period. One of the things that we're going to be talking about here today is specifically in the area that many of you I know are interested in, and that has to do with finding private money. And raising private funds is an important part of what all of us do as real estate investors, so I'm excited in hearing that as well. But first, I just wanted to welcome you aboard, Bob.
No, thank you, Bill. Glad to be here.
Well, we're glad to have you. I kind of gave just a brief overview of your background, but I'm sure our listeners would be really interested in finding out how you got involved in real estate investing.
Well, the short version of my story is my basic background was in sales. I was an outside salesperson, most of the time selling office equipment and copiers. And, by around the time I turned I was getting close to 50 years of age. I was really tired of working in the corporate environment, and I was one of those that stayed up at night and watched those real estate infomercials and just dreamed about, doing something different. And at the end of the day, I got tired of making money for other people and wanted to do something for myself. So right around the turn of 2000, 2001 and 2, I left the company I was with, and which, as I mentioned, was in outdoor sales. At the time, I was selling copiers, and went and I started buying single family homes here in Central Florida. I happen to live in the Orlando, Florida area. So we started buying properties that were foreclosed. But before we did this, we went and I realized that I didn't know anything about real estate. I had some experience just in my own home, which really isn't experience from an investor point of view. But one of the first things that I wanted to do is that I wanted to get educated. So I signed up for a series of real estate programs in wholesaling and foreclosures, and started learning about real estate in general from the single family side. And I did my very first flip by controlling a property for $50 here in Central Florida. And I had it for 60 days and turned it and made $45,000 on the wholesaling of that property to another person that was going to actually take that property and rehab it and sell it for a lot more money.
So you purchased that property for $50, or you got involved in the transaction for only $50?
Yeah, I tied it up for $50 with the homeowner, and then we worked out the deal with the bank, and through the homeowner was very cooperative. He was in the middle of a divorce. There was a circumstance, and so instead of going and closing on it, I wholesaled it off to somebody else, and that was and I can tell you that $45,000 more than paid for the 20-something thousand at the time we paid for our education.
Wow. Great first investment.
Yes. And so from there, my wife saw what I was doing. She was still working in the corporate world. And, of course, she's been in real estate for many years, most all of her life in some capacity, which is really how we met. We started a company with the two gentlemen, Mark and Jerry Silverman out of Pittsburgh, that was just a little retail place. It was called American Eagle Outfitters, which we didn't realize it at the time, but we had taken it from zero and grown it it became a national company. And so my wife, who was actually my partner in our real estate business, was responsible for a lot of the operations and all the real estate and finding the locations and many of the other things from a finance side. So, she has, over the years, a lot of experience in real estate, having worked in it, but not from an investor point of view, which was what I was now doing. So we started buying single-family homes that we short sell, that were foreclosures back before all this became popular. And we started building a portfolio of single-family homes in Central Florida. And then the market crashed, as you know, the real estate market, and we had to sell as quickly as we could everything that we had. So we were able to do that. We didn't make the kind of money we had hoped because the prices were falling. And at that point, I lost my income, and I lost most all of my net worth, and I had to start all over again at about the time that Bush was leaving office and Obama was coming in. And our country and our labor force, we were losing over 500,000 jobs a month in that period of time. And as we all remember that, it wasn't very good. And that was the point in time where I had to reinvent myself. Unfortunately, my wife had long since left her job, so we were having to start all over in the worst real estate environment that you could possibly begin in. And then that's when I realized that I had to reinvent myself and started looking at commercial real estate and specifically apartments, since it seemed to me to be a more natural and comfortable transition from residential to apartments. I started figuring out what I better do here to get to do something, because I needed to do something right away.
Did you see that that apartments were more profitable than the single-family realm?
I thought that they were, but at that point in time, I didn't know anything about apartments, but I tried to use what we knew about residential, and I started looking at some smaller apartments in Daytona Beach and here in Orlando, and I came to the realization that, how am I going to do this? And, I don't have any money. And, So I heard a gentleman by the name of David Lindahl, who was a big apartment guy, and he was going to have his very first seminar with his SEC attorney up in Boston on how to, come to my seminar, was basically what he said, and learn how to raise all of the money that you'll ever want for your deal. So I'm thinking, boy, I have no idea who this Dave Lindahl guy is. I hope he's the real deal. And as we all know, he is, and he's been quite successful in apartments. So I went to my wife and said, honey, I said, we have to go to the seminar up in Boston. She says, well, how much is it? I says, well, it's $5,000. She says, well, we can't afford to do that. I said, honey, we can't afford not to do that. So we put what we had left on our credit cards, and we flew up there in December, and there was over 300 people. We sat in the front row, in the front seats, and I sat there for 3 days, and I didn't leave, and I took in everything that I could, made all my notes, and then after Christmas, because it was the holiday, I came back, opened it all up, and I applied my sales skills that I had along with what the SEC attorney was recommending how we do this, and I put together my own elevator pitch, and within the first 90 days, I raised $1 million in the heat and the worst part of the real estate crash.
Wow, that's amazing. Now, did you make any contacts in that room with the 300 or did you just apply what you learned to find your investors?
I applied everything that I learned with just people here and that I knew here in Florida. And the thing is that's really important for everyone to understand, because we've had, some, good success. At least, for us, we feel good about what we've done. But when we went through that transition, we didn't have any family members. We didn't have anybody where we could go to get money to get us started in real estate. And so, my wife, her family, her dad was a coal miner in West Virginia. And yes, I married a real coal miner's daughter. My dad was I grew up in Gary, Indiana, and he was a steel mill worker. And my dad had retired, and neither one of our families had any money. So we had to figure out that we got to go and we've got to do something, because we're already over 50, and we've got to figure out and make this change. And so once I learned how and I got this done. I raised $1 million. I had in accredited investor forms by talking with different people. I didn't know anything about apartments.
Wow. And you're trying to get these guys to give you their money, and you've never done it before. That had to be pretty challenging, huh? Yeah,
and the question is, well, how many of these apartments do you own? Well, why aren't you buying in Central Florida? Why are you looking outside of the state? Why should I give you my money if you've never, done this before? And so I realized that the next thing I contacted Dave Lindahl's office, and I found out that he was having a boot camp in Atlanta that I could drive to about apartments and how to buy apartments. And so I went back to the well, went to my wife and said, honey, Dave Lindahl's having this, and I need to go up to this boot camp. And she said, well, we can't afford to. I said, well, we can't not afford to.
And you still hadn't raised any funds at this point, right?
Well, I had $1 million of accredited investor forms, and I was climbing.
Okay, so you had raised some money. So she saw that you were doing that.
Yeah,
but
it wasn't my money. They were just investors that said, "Look, if you find a great deal and it meets this model, I might be interested in investing. And if so, I'll give you $100,000, I'll give you $250,000, I'll give you $50,000." So collectively, I had over $1 million of accredited investor forms that I got from the private money boot camp that I went to. Okay. So I drove up to Atlanta, and that's where I first talked and met Dave Lindahl.
Okay, gotcha.
And so I went to learn. I got all the information on how to market and how to buy apartments, and then the second day I went up to him and I said, Mr. Lindahl, I said, my name is Bob Bowman, and I just wanted to thank you for everything that you did for me. because of you and that boot camp that you had, I've been able to raise over $1 million. Now, we were at a break, and there was like 250 people there, and Dave was on the side of the stage, and he looked at me and he said, "What was that?" I said, "Dave, I just want to thank you. Since I was your class, I raised over $1 million." And he goes, "Come here." He goes, "How'd you do that?" and I looked at him very. And I said, "Dave, I just did what you said." He goes, "Well, what did I say?" And he goes, "Well, wait a minute. Never mind. He goes, where are you sitting? I need to talk to you. Look, as soon as everybody sits down, where are you at? I need to talk to you. I'm going to call you up here as soon as we get off." So he calls everybody in. He goes, "Okay, where's that guy I was just talking to?" And I raised up my hand and I came up on stage, and I had that was the beginning of our relationship. And when people realized that were there to learn how to buy apartments, the fact that I was able to raise money, I became an instant, rock star, so to speak. And everybody wanted to come and talk with me and bring me deals, because I had this gift, so to speak, and this opportunity that they needed for their deals. So that's how I made the transition. And then I think it was his boot camp was about 90 days, 3 months after the private money. And then I joined the coaching program. I want to have a coach. And I really think that's part of, success when you're getting going, is really to, be coached and have a mentor that can help navigate you, not just the things to do, but the landmines and the things to stay away from. And a lot of the mistakes that have been made in the past that you can learn from people like Dave Lindahl or his program that have already been there. So it kind of put me on a fast track, and within probably I joined that coaching program. Within 6 months, I had my first apartment under contract.
So let me just recap this. So you went to this forum, this fundraising forum, and that's where you got the commitments for for $1 million, and then 90 days later went to a boot camp, and then you're saying 6 months after that is when you made your actual first purchase.
Yeah, well,
it's almost like 9 months later from when you.
Yeah, it was in contract, not purchase, but it was. I had a contract, and the money that I raised was not at the event.
Okay, right, I understand.
Yeah, it was after Christmas, after I got back, and I started. Okay, now what am I going to do? I'm going to join the chamber. I'm going to do this. I'm going to do that. I'm going to start talking with people that I know. And about what I'm doing, because I'm now an investor that buys institutional grade apartments, and on and on.
Okay, so you didn't actually raise – I'm sorry, I just wanted to clarify. You didn't raise the money at the event. You raised it after you got back from that event through your contacts just in the community that you started networking around and meeting accredited investors at that point?
Correct.
Wow. Well, where did you go to find – I mean, you mentioned the chamber. Again, you were sort of a new guy, I would imagine. How did people start committing these types of funds to you without your background of having been an experienced investor?
Yeah, that's a great question. And at the end of the day, whether you own apartments or not, and whether you're a beginning investor or you're more experienced, people that want to that want to invest with you, they have to see value in you, and more importantly, when they give you their hard-earned money, is that they have to trust you and know that you have a high level of integrity, and that that you will always do the right thing in the best interest of the investor. It's kind of like having a public company, even though these are private placements, and they're not. And when you syndicate a deal, it's not registered with the SEC. But the investors, the people that give you money, are people and friends, and or people that really feel that if they give you your money. See, investors only care about three things, and these are the things when I meet with somebody. And I talk to them, because I talk all the time anywhere I'm at. I've raised and gotten accredited investor forms in some of the craziest places, I can tell you. But they want to know, um, how much money do you need? How much money am I going to make if I give you this money back? And lastly is, when are you going to give me my money back?
Right. Well, what did you tell them? You didn't have really even an apartment yet. What were you telling these people, that they would commit the $1 million like that?
Well, yeah, and again, the most important thing is, at that time, is that since I didn't have property to talk to them about, that I talked to them about my business model, which was the same model that I copied from Dave, because his model was very successful, and that was the model that I was working from. So when I would talk to these people, some that I knew, some that I was referred to, some that I didn't know, I said, if I find something that meets this criteria, is this something that you might be interested in investing in? And he said, well, absolutely. I'd definitely be interested.
Could you just kind of give me just a rough outline of what that model was? Did you present like a sample? I'm looking at a property in this price range, in this class, and so forth. Did you define it like that?
Yeah, well, when you're talking with somebody, once you have the accredited investor form signed, you can present a deal, and and you can talk to them basically about anything that you want. But when you're initially talking with people, you have to talk. You cannot present a deal, and of course, I didn't have a deal to present anyway. I mean, remember, I didn't know anything about apartments. Right after I got back from the private money. But what I would say to them on a very high level, I basically, and I'll paraphrase here, I say that from when I underwrite a deal and I'm looking at it from 30,000 feet, I'm in order for me to consider just making an offer on it on hard real numbers that can be proved out, it has to be able to annualize on real numbers between 18 and 20% every year. And that would be total cash and equity. And, I'm looking for a debt, ratio is somewhere between, 1.4 and 1.6, going into it. And so I would, and this is our model. This is what we work from. And the property has to be well located. And I'm looking for either well-located B or C asset, preferably a C asset in an A or B area, or a B asset property in a B or an A area. And also, the property, we're looking for some type of a value play where we can go in and make improvements and increase the value. So our target financial numbers are, again, at 30,000 feet or 18 to 20%. And, we'd like to go into these things at, anywhere between a 9 and 10% cash on cash return.
That's excellent. Did you have a certain cap rate in mind?
No, because it just depends on the property. Back then, believe it or not, C properties were selling for around 10 or 11 caps, and B properties were selling for, anywhere from 8.5 to a 9.5, 10 cap, and A properties were in the 7s. New properties, and that was back into when I first got into the business in 2008 and 2009.
Were you looking at a certain number of units or a dollar value of the property when you would speak to people?
I was looking for initially 100 units or more, and the reason for that in the apartment business, when you have and this is a generality. But if you have 100 units, more or less, you can afford a full-time maintenance person and a full-time administrative person. And it's the same amount of work. It's the same amount of work, whether it's 100 units or 10 units to get the deal done. But you can make a lot more money if it's 100 units or more.
Gotcha. So tell us about that first deal. Okay, here you have this momentum going. You've got these accredited investors with $1 million ready to throw behind you here. And what did you end up finding?
Well, what I did is I was looking here in Central Florida, and of course, everybody knows in Florida, particularly during that time, things are very expensive here. Real estate taxes, because of all the hurricanes, insurance costs are typically higher. And I couldn't find things that met the model that had been so successful with David. And I was looking in different cities, and finally, the coach that I had, because I had a coach through David's program, said, Bob, you need to go to, change what you're doing because it's not working, and go to Dallas, Fort Worth, call these people. These are some broker names. There's a lot of inventory there. There's a lot of opportunity, and stay focused in there. And then you also need to go out there and fly out there so that they can see you and know that you're serious about what you're doing and you're the real deal. So I did that, and I met with a broker out there and who had sent me a property a couple months earlier, and had not sold. And so he told me he said, well, you could probably get it for this amount of money. And I went out and looked at the property, and then I ran my numbers, and I made an offer on the property and put it under contract.
Oh, that's great. Now, you had just taken a step back here. So at this point, after the boot camp or what have you, you started calling brokers in the area that you were interested. I guess you looked obviously in the Florida area first, but then realized that Texas had better opportunities, and you started building relationships with these brokers over the phone.
Yes. Okay. And then I flew out to see them.
Okay, great. Did you waited though until they had properties to show you, or were we just flying out there just to make contact initially?
No, I wanted to analyze or underwrite as many deals that I can, and then the deals or the properties that were of most interest, where I thought I could make an offer or where it might make sense, then I lined some of that up. So, I had a chance to tour property as well as, meet the broker, so I could kill two birds with one stone. Because remember, I didn't have any money. We were in pretty bad shape. And it was, and to fly out to Texas after I spent our last money on these boot camps, it was pretty hard.
Oh, I bet.
At the time. Because by then, we had gotten rid of all of our single family homes, except for a couple. So, but my first apartment was 113 units, and we purchased this for $3.4 million. And it was a C asset. It was a really ugly apartment. It was a crazy color green, and the owner, who had it for many years, he had 3 layers of barbed wire around cyclone fences around the swimming pools.
Oh, gee whiz. Why did he do that?
Oh, he was something else. He was really tough. So there was, there was a real opportunity to just on the way that he had managed it, to really just that alone was an improvement, was a value play.
Oh, sure.
So, I mean, it was really something. It was really quite a great first experience. But we went in and we put it under contract, and we closed it in January of 2009, and that was the period of time right there in the middle of January, February, when Bush and Obama changed hands, and it was really tough because people were saying, well, Bob, first of all, what are you doing in real estate? Real estate, are you crazy? What are you doing in Texas? Who do you know? I mean, what do you know about Texas? You've never been there. You never lived there. Why don't you buy here? If you'd buy here in Orlando, maybe I might be in your deal. And I have a couple really good buddies in the chamber that regret not putting their money in that deal.
Wow.
We bought it for $3.4 million, and we sold it about a year ago for $6.8 million.
Unbelievable. Wow, that's great. What was it initially offered for? And now the 3.4 sounds like your final price, but was it offered at around that same price, or was it offered considerably higher?
Well, no, I mean, it was offered, I think it was right around 4.5 or 4 maybe 4.2 million. Because, the rents were, we made improvements and lifted the rents over the 6 years or so that we held the property and made improvements in it.
Right.
But, when we learn, you learn a lot in that first deal. And from that, which was the springboard to other opportunities, down the road that we ended up getting involved with. We have a philosophy of clean, comfortable, and safe, because that's what everybody wants. They want a place that's going to be clean and they want to feel comfortable as if it's their home, and they want to feel safe. And so in all the apartments, we have security cameras for the employees and just in general, and also, we have a real focus. Part of the success, it's one thing, to get a deal and take it down, but it's another thing to operate it and then to operate it successful. And as we all know, that the number one reason why people move out is because of poor maintenance. So that's the thing that we really focus on, is treating the tenants like the gold that they are, and being consistent and taking care of their problems.
Did you have trouble finding a good property manager, or was that fairly easy for you?
In the first property, it was very easy. The person that had been there wanted to stay, and she was phenomenal, and she stayed with me for the whole almost 7 years that we held the property.
Wow, that's great. That doesn't always happen, but that's wonderful. Now, during that 7-year period, were you purchasing other properties still? Were you moving forward to acquire other properties as well?
Yes, we did, and we took probably the first year to really get our sea legs, make sure that the model was holding out, and we were getting firsthand experience on how to operate and how to operate successful. And then we started acquiring in North Carolina and South Carolina, a little bit closer. And then within the market started to change a few years ago, and the cap rate started becoming more and more compressed, to the point where, the model didn't work as well. It got harder to find those kinds of deals. And so we started to buy, because we're contrarian, we started to use our experience and our knowledge to buy office buildings.
Oh, wow. Interesting. Let me just take a step back a little bit here. So you purchased this property. How soon after this property did you purchase your next property? Do you recall?
Yeah, it was probably about a year later.
Okay, so you're just kind of getting this one right, learning from this, and then in the meantime, you're still looking, I assume. Was that also in the Texas area?
The second one, no, it was not. It was in the Carolinas.
Oh, that was North Carolina, or
yes.
Okay, and so what's happening on the investment side? So you had you obviously raised the funds to be able to get this first property. Was that from those original accredited investors that you had made contact with?
Some of them. What's interesting about raising private money statistically, and it happens in every deal, and it's just a formula. And again, this is a generalization, but if you need to raise $1 million, you need to really have close to $2.5 million, because when you send out your package and your operating agreements for everybody to sign off, and then the wiring instructions, about half of the people are not going to participate in the deal, and sometimes half of them are only going to, they might commit to $100,000 and say, well, yeah, I'll be in the deal, but I think I'm going to be more comfortable just doing $50,000. So you have a lot of that going on. So you really need to have a little more than twice the amount of accredited investors when you get ready to go into a deal, because statistically, you're gonna fall short if you don't have more. And then it's a first come, first serve. So in the event, like I had a deal that we needed to raise $2.8 million. And so I put the offer out there, and we had it in the bank within 5 days, and I had people coming in after that, but we had to return their money.
Unbelievable. So you've set up sort of a money-making machine for yourself then for these investments.
Well, yeah, I mean, it comes over time. People that if they trust you and they see that you're a performer, it's kind of like you have to build that credibility and that confidence. And when people see that value in you, then they want to participate, and that makes it gets easier. Some things get harder, but some things get easier as you start to acquire more properties.
Now, going back to that first example, because you gave us a lot of details on that, it was $3.4 million, but how much did you have to raise from investors? Did you finance the difference? And did you also raise funds for the improvements, the upgrades and rehab and so forth?
Yes, all of that. We raised $1 million over the holidays, which was really a challenge. I wouldn't want to do that again.
Wow.
Yeah, it was tough, but it was for the 20% down. It also included the acquisition fee and probably about $200,000 or $250,000 in immediate capital improvements.
Okay, so only $250,000 for capital improvements? Or?
Yeah, that was for the immediate deferred capital improvements.
Okay, gotcha. Did you have to raise any more later on for anything else more extensive, or was it fairly light in terms of the upgrades?
No, we didn't have to raise any more money.
When you first started talking to people about what you were looking to do, your business model, did you have? It sounds like you just presented it in conversations with people, but did you have a document or a leave behind or something that you would give to people or send after a conversation that kind of outlined specifically what you were looking to do?
Yeah, I mean, I had you call it a credibility document, something like a one-pager that had a little bit about my background and also outlined the business model, not any particular investment or anything. Again, you can't do that until they sign the accredited investor form. Then you can, really, once you've established the relationship, then you can talk to them about anything that you want. But a lot of it is that, and this is what I teach people. I've been doing the private money boot camp for Dave Lindahl. Probably for the last year and a half now. He was teaching it, and he asked me if I would just do it for him. And a lot of the times, when I talk with people and I meet people everywhere, you have to do it in a conversational manner. It's kind of like when you pick up the phone and, without hesitation to call your brother or your sister or your mom and dad or your best friend, you just have a conversation. People don't want to be sold. They don't care that you have like the greatest deal since sliced bread, because that's the kind of thing that turns people off. They don't want to be sold. But, what they want to hear, is that, that you have an opportunity. You don't want to talk with people that, hey, would you like to invest with me? It's certainly really the wrong approach. And that type of approach is a turnoff. I just like to talk to people about what they do, and and the trigger conversation that starts me off into my conversation is that what do you do for a living, Bob? And that's when I tell them I'm a real estate investor and I buy commercial real estate that's well located, that they produce good cash flow, and they create a strong equity on the back end over 3 to 5 year hold period.
Well, I understand that you have a seminar coming up that you're actually going to be in. For those listening from Southern California, I'm sure they'd have an opportunity to attend on raising private money. When is that going to be happening?
Yeah, actually, thanks for asking. It's in October. It's in Los Angeles, and the dates are October 21, 22, and 23. And you can go on to the creativesuccessalliance.com, which is Dave Lindahl's educational website. It's called creativesuccessalliance.com, or just type in Dave Lindahl, and I'm sure you'll find it in there, and you can get more information about the cost and the location.
I'll put the link in our show notes just so everyone knows. In fact, everything that we're talking about here, we will have detailed in the show notes that'll be posted on the olddogsreinetwork.com website. So there'll be we'll put a link in there for people that are interested in attending.
Yeah, terrific.
Yeah. Well, this just time flew by really quickly here, but boy, you provided some great information, and I think I could probably go on for a couple hours here just talking to you, because this is all great stuff that people need to know. It's raising funds is. I know for me. It's one of the biggest challenges. I'm not comfortable doing it. I wish I had sort of the sales background that you had, that probably made you a lot more comfortable in presenting this. But it is I think some of the things that you've given us today, it has helped a lot in terms of just trying to put your hands around what do I need to do, and what's a good approach. But I'm sure you go a lot more into detail on that on your seminar that's coming up here too.
Yeah, that's right. And if I may just say, I know we're running out of time here, just real quick. I was at a seminar a few years ago, and there were three men on this panel up at, it was a lecture at Harvard, and I was invited to attend, and it was three different men that raised, millions and millions of dollars over the years, building companies and everything. And the thing that came out of that I remember more than anything else that they all said is that, if you're going to have a business, whether it's going to be in real estate or whatever your passion is that, you have to learn and you have to be able to raise money for your business, because if you cannot do that one thing, then you will not have anywhere the level of success that you would like to have. And which is the reason they also said that many of these people in these large corporations, they're CEOs because they know how to raise money. But it doesn't matter. And once you learn how to raise money, then you can do this for anything. It doesn't have to be real estate. So if you're able to come to the seminar, I actually give you the language and the tools, and we all do it. Everybody does it. And so that when you walk out from that seminar, you're able to go out immediately and start talking to people right away.
That's great. That's invaluable. Well, what can you tell me just a little bit? You've given us some great information. You've been great on answering my questions here. What can you tell us just about your current business? What are your plans? Where do you want to see your business go?
Well, currently we've been, for the last year or so, we've been actually selling our apartments because it's really, a lot of the prices in many of the parts of the country are hyperinflated, and so we've been focusing on offices where the cap rates and the cash flow fall more in line with our business line. And we're also we're buying some larger properties, because besides once you learn how to raise private money, there's also larger money out there. They're called, there's equity companies and a thing called family office that have large amounts of cash that they would like to place into deals. And so my goal is to start buying more and more of the office product and into the larger deals and build my portfolio until the apartment business comes back. So that's our real focus right now.
Oh, that's great. Now, are you doing any development at all?
No development. We're sticking to cash flow properties that have somewhat of a value add. We're looking for deals. We're not looking for properties. You've heard that cliche, but we truly are. We bought a couple years ago in our first big purchase, big for us. We bought an office complex, 7 buildings in Charlotte. It was a B asset in A plus area at a 10.1 cap. And then after that, we bought an A office in an A location outside of Dallas, Texas at a 9.1 cap. And, you can't see these kind of cap rates and numbers in apartments anymore.
Oh, yeah.
The quality of the buildings. Now, the office building is picking up a lot of momentum over the last year or so because people are seeing that there is opportunity out there. And so now, that's starting to change some. But we really are focused. If we can find an apartment or an off-market deal, we'll certainly look at it or make an offer on it. But we like the buildings that have the flex space and the B assets because they have greater opportunity for equity and cash flow, and more so is that you get a bigger of the belly, so to speak, of the tenant base out there, where you can accommodate a lot more different types of businesses as opposed to a beautiful brand new office building where you basically have office white collar type workers. We like the B asset, even single story with flex space, so you can accommodate retail and wholesale and many different types of business and industries, so that in a downturn, whether it be in an industry or you have a good tenant base.
Are you looking at any retail triple net type deals at all?
Yeah, I mean, we are. We just decided to do that about 2 or 3 years ago. We weren't so sure because, many people in our country didn't have a lot of confidence in the economy. And as it has slowly improved, and it is improving, the consumer side of, retail is a little bit finicky. And so if something happens to the economy or consumers lose confidence, retail's the first to go. It can be a high risk. But, now that things economically are coming together, we're entering into a cycle where even a mixed use where you have office and retail, which we just made an offer on just a few weeks ago on a beautiful asset in Texas. We ended up not getting the deal. We made it to best and final, but any kind of retail, mixed use. But the key to a lot of that is that you want to make sure that that the type of mix that you have are more service oriented, not where people can just get on the internet and buy it, without having to go into the store. So and you also want to have a good anchor. That's the other. If you're going to have a retail center, you have to have a really good, strong anchor, and really the formula is to find, just a good bread and butter type place where everybody needs to go. You're talking about, hair salons or nail salons and dry cleaner and just, people where there's service where, you have to go. You have to do it. And those are the type of businesses that are going to hold up much better in a retail center.
Well, we definitely ran a little over here, and who knows, we may break this into a two-parter. We'll have to see, because there's so much good information there, Bob, and I really appreciate it. But we're sort of at what we call our wrap-it-up stage, where I ask you a series of quick questions, and you just kind of share your answers. And are you ready for that?
Sure.
Okay.
Again.
All right. Well, let's begin to wrap it up here. And I will ask you first question here. Favorite real estate book?
Ooh, that's an easy one there. That's The Complete Guide to Buying and Selling Apartments by Steve Burgess, Berges. The Complete Guide to Buying and Selling Apartments by Steve Burgess. That is most awesome. That is my Bible, my real estate Bible, so to speak, because it's well written, has all the financial ratios that are easy to explain. It navigated me through all of the training that I had. It's very concise. I highly, highly, highly recommend it, and I recommend it all the time.
Great. Favorite business book?
Ooh, I like David Lindahl's Market Cycles. That was a really good book.
Now, that's not Emerging Markets. This is called Market Cycles?
Emerging Markets, I'm sorry, yes.
Oh, okay. Great. Yes. picking the markets for you is also key to your success as well.
Yeah, very much. And, David has 4 cycles, and it's a great book. And interesting enough, I heard something around the time David wrote that book, and I told David about this at Warren, and I heard Warren Buffett on CNN. And he was professing that from his perspective, there was 3 cycles. He goes, first come the innovators, when nobody's interested in the property. It's too contrarian. Nobody wants to touch them, but you have the innovators. And then when people over time see the value, come the imitators. And then all the imitators come, and they're all trying to buy those same properties. And then the cycle changes, and then he says you have the idiots.
I love it.
So you have the innovators, imitators, and idiots. And so in my mind, that's a visual for me. So but anyway, I really like markets and market cycles. It's really important as part of the underwriting. When I talk with investors and buying a well-located property and understanding that market cycle, it's great. It's a very, very good book.
Excellent. How about your most valuable website for success? Not counting your own.
Yes. Well, Reis. REIS has a website out there with all types of statistical information, REIS. I really like their website. Huge company. They have lots of data that you can use for your real estate.
Yes, that is good. We actually tap into it for our newsletter a lot. Some great articles and research in there. How about favorite app? Anything on your phone that you use in your real estate work?
Ooh, I don't really have an application, to be honest with you, on my cell phone that I use or on my computer that I can say. The application that that I like the best that I use in our business is Rent Manager because it's so intuitive. And when you're buying property and you're training people or you have new people, it's online. I like it if you have a fire or a theft and someone steals your computer, they don't get any data. Things are backed up every 2 hours or so. And so I really like that software that drives our business and our accountants, people, our investors, they love that product.
Oh, great. That's great. Great. Final question. If you, let's say something devastating happened, could have been anything financially, that just you lost everything except for $1,000 you have in the bank, what would you do to sort of relaunch your real estate investing business with that $1,000?
Well, I would do what this is almost what happened to us after we lost, or we had to sell all of our single-family homes because we really started in an extreme amount of debt. We didn't lose our home, and I don't know if we even had $1,000 in the bank. And so what I would do is I would go back out and I would start raising private money and talking to investors. And actually, the way that I got my money for the earnest money, I actually went to a very good friend of mine that had, he had some money, and he also was interested in being an investor. And I asked him if he would loan me the money for that very first deal that I did, and I would pay him interest on it when we closed on it. If not, I would cancel the contract and return his money. And so that's what I did, and that's what I would do again.
Great. Yeah, as I asked that question, I was going, gee, you could speak from experience on this one, which is fascinating what you did, especially how you got your wife to agree to let you use your credit cards for your training. I got to remember that one. Well, finally here, we'd like to, if you'd be so kind, how would people be able to get a hold of you or reach you if, maybe they're interested in getting information, maybe they're interested in partnering with you or investing or whatever it may be? How could they do that?
Okay, well, let me give you my email address and my phone number.
Oh, wonderful. Okay.
Yeah, and that would probably be the best. And that way they could contact me directly. My email address is Bob Bowman, BOBBOW. MAN52 @gmail.com. And my telephone number is 321-239-0647.
And we will have this information, as I mentioned, posted on our show notes. So if you're driving in your car, don't try to write it down. It will be readily available for you at our website. So great. Well, Bob, as you know, we're called the Old Dogs REI Network, and all of our guests get the joy of being able to close us out with a great old hound dog howl. Now, I know in Florida they probably don't have too many hound dogs, but up in Pennsylvania they do. So let's just go ahead and give it all you got here for our closing howl.
Well, here it goes. Woo! Woo!
All right, great job, Bob. Here, okay. Very good, Hal. Well, we have enjoyed having you on here so much, and gosh, I know there's a lot of folks that can relate to your situation. Many of them are 50 plus and are looking at real estate investing and as a means to be able to take them through the retirement years, and hopefully not just survive the retirement years, but be able to prosper during that time and be able to do the things that they've always dreamed of in their retirement. So I think that what you shared today is going to help contribute to that and help these folks to be able to move on to that next stage. So I can't thank you enough for being on, and for all those old dog listeners out there, I just want to thank all of you. We know you could be doing a lot of other things right now, but the fact that you've taken the time to listen to the show today, we really appreciate it. So thank you so much for listening. Thank you, Bob, for being our guest.
Yeah, and thank you, Bill, and all of your listeners for allowing me this opportunity. I hope it has helped, and if anybody needs help, now you have all my information, and, thank you so much.
Well, the pleasure has been all ours, Bob. We thank you for that. So until next time, remember, cash flow is king and real estate investing the means. Thanks again for listening, and God bless.
Thank you very much for visiting the Old Dogs REI Network. We would greatly appreciate if you would stop by iTunes and let us know what you think of the show. We would love if you could subscribe to the podcast, give us a 5-star rating, and write a review. The more ratings and reviews we receive, the more visible the podcast will be to others. Thank you.